Hey everybody, this is Osprey from mychartcoach.com, and in this video here we're taking a look at the futures here, and yeah, we're going to be looking at the indexes and volatility and yeah, some of the ETFs that you can use to trade the indexes. And so first up here, what we're looking at is a lot of red. You know, after this 4-day rally for the Dow Jones Industrial Average, for the S&P 500, for the NASDAQ, red candles are forming today, and the same thing for the over here on after a 5-day run for the Russell 2000. This is 2 days, 2 red days in a row, and so basically what's going on is, well, I guess a red day yesterday, and then you know, starting in futures trading tonight, another red candle is forming. And so, you know, anything can change between now and the opening bell tomorrow. But right now, it's looking like a possible gap down open type of situation with Trump coming out and saying that there could be a possibility of 200 billion in new tariffs. And so it's going to take a little while for that to play out. So a lot can happen between now and then. And so, yeah, we know how the art of the deal works. You know, this could be a lot of posturing, but right now, the market is taking it as a negative. And what happened today was the VIX. You can look over here at Vix Futures. You can see here it's a green this evening here. It's up nearly 6%. And basically it was bouncing intraday today during the trading session, and that was a red flag. The Dow Jones Industrial Average was up over 100 points. It was up like 120 points, and VIX was up over 2%. And so that just didn't make sense. So people were posturing for some volatility to come, but the indexes weren't showing that yet. And after being on a multi-day run, it was a red flag. And so I'll show you the train of thought here. We're looking here at the Dow Jones Industrial Average chart, and you can see here it's been on this really nice run. You can see the close yesterday was super bullish above the middle Bollinger Band and the 50-day simple moving averages, and that did signal more upside potential. There was super nice follow through today, and it did push higher, and it closed near high of day. It was a very strong day for the Dow Jones Industrial Average. Right now, it looks like it could be a gap down open type of situation. There is a small gap between high of day yesterday and low of day today, so look for that gap to fill. The big thing now is going to be all about staying above this support zone. There's the middle Bollinger Band, which is the 20-day simple moving average, and the 50 and 100-day simple moving averages. They're all converged here around the same level. And so if 24646 holds, that's the 50-day simple moving average, then this new uptrend should continue. It could get a little pullback, test support, bounce off of it, and continue higher. If it did drop back below the 50-day simple moving average, the middle Bollinger Band, the 100-day simple moving average, then that would be a reason to take concern, and because this previous downtrend from over here could continue. And so it's going to be real important that it stays back above that middle Bollinger Band. And so if you look here at the Dow Jones Industrial Average 15-minute chart, what you're going to be looking at tomorrow, you can see the really tight Bollinger Bands to close today, so that signal that it could either break out higher or drop lower. It looks like it's going to drop lower. If the 50 simple moving average at 24829 it turns into resistance, that's going to be a red flag. You want to see it bounce off of that level tomorrow. If it trades, it starts off trading below that level and then it bumps up and fails to break above, that's going to signal downside risk. It's going to be all about trying to hold that 50 simple moving average on the 15-minute chart for the Dow Jones Industrial Average. The downside risk is if it turns into resistance, it's going to come down here to this 100 simple moving average at 24615. Now today, UDOW, okay, had been the play for us, and it did follow through nicely today. It was up 4 days in a row, and you can see it had the gap up open today. You know, after closing yesterday above major resistance levels, the 50, 100, 200, and 20-day simple moving averages, it closed above all those levels yesterday. Now if it stays above this 100-day simple moving average, currently at 89.29, that should signal that it wants to keep pushing higher. That should signal that this new uptrend is going to begin. If it were to drop below those levels, that would be a red flag. Right now, it looks like it could come down here and fill this gap. There's a gap between high of day yesterday, low of day today. It at least, if there is a gap down open tomorrow, you're going to see this 90 level tested. It really needs to stay above 89. Okay, and so if it could stay above 89, it could get a bounce going. Now on the UDOW 15-minute chart, since this was on a big rally, you can see it started back here on the 5th when it was working on getting above the moving averages and turning these levels into support, and then on the 6th, it got above the 300 simple moving average. That's the blue line, and it just had this really nice uptrend going. Well, we were looking for any kind of signs of the chart breaking down after being on a multi-day run, and when it broke back below EMAs 4 and 8 here, after holding before it held EMA 8, this candle right here was the red flag for me at 12:30. It being breaking support EMAs 4 and 8, while VIX was up. VIX was up at this time over 2%. It was just signaling that, okay, something's not right here. Time to lock in some gains after this multi-day run and look for a potential reload lower. We didn't know about the tariff news at this time, but something was signaling that the markets could take a breather, and we found out after the close the reason why. Now the share price did drop below this middle Bollinger Band, and it got back above into the close. Tomorrow 91.47 is going to be that big level it has to get above. If that's resistance, it's going to signal downside risk. If it comes down here and it tests this 90.64 level and that fails to hold, that's when you're going to know the chart's broken. It needs to stay above the 50 simple moving average to keep pushing higher. If it drops below, that's going to signal downside risk, and you could see it drop down to 88.34. Now, one way to play the market when it's dropping is SDOW, SDOW. This is short Dow. And so basically when the Dow is dropping, this is going up, and when the Dow is going up, this is dropping. And so you can see here it's been on this multi-day pullback, and so what could happen is it could work its way back up here to EMA 4 at 1781. That's going to be the big level to break, the first big one. It has to get back above EMA 4, and that would signal this reversal. It's trying to break this downtrend, and then you can see all the moving averages are converged here. You have the middle Bollinger Band and 50-day simple moving average, both at $18. It has to get above that level and then back above the 100-day simple moving average at 1834 before it could start, getting a bullish move higher. It has a lot of resistance above, but keep an eye on it for a technical bounce tomorrow with, the Dow down. SDOW is going to be in play tomorrow, at least at the open. It's going to be, it's going to be delivering some nice gains more than likely. We'll see what happens. And then, as you can see here, the Bollinger Bands are super tight heading into the close. That was signaling that there was going to be a move was imminent. It was either going to break down lower or break out higher. What you're looking for on the 15-minute chart is a break above this 50 simple moving average at 1749. If it can close above that level and turn into support, that's going to be your signal. Okay, SDOW is in play today. It is bullish. It is heading higher. And then once it's above that 50 simple moving average, that's the stop loss level. You want to see it stay above that level. If it were to drop back below, that would be a sell signal, similar to over here on July 5th. It got above the 50 simple moving average, but it dropped right back below. And so if you loaded on the break below, you had to exit right away because it was a head fake. It wasn't ready to go. But once it holds and turns into support, that's when you can see a run back up to that 100 simple moving average and back up to this gap level. Okay, there's a gap between high of day on this day and low of day on this day, and so you could see it come up here and try to fill that gap. Okay, so let's look at VIX here. So this is what we were looking at intraday when it was showing some danger ahead for the markets. VIX did close down on the day, but people were posturing into the close or midday in the middle of the day. They were able to run VIX. This is Vix Futures up above this 300-day simple moving average. That's going to be the big level to break at 1308, and then just above it is the pink line. That's the EMA 4 at 1341. If it starts trading above both those levels, that's going to be your signal that VIX is heating back up again. Now, if it fails to break this 13 to 1350 resistance zone, that's going to signal more consolidation. Okay, so so it had worked its way back down to the bottom of the chart. You know, it's just ironic that it's you know, the bad news came out right when it's you know, hitting the low point down here. This is where it likes to bounce off. And then, you know, is VIX going to get another rally, you know, heading into earnings season, or is the tariff thing just going to you know, everybody's going to digest the news, and by the time the market closes tomorrow, everybody's going to forget about it, and volatility will be red again. You know, we're not sure. We'll have to see what happens. Right now, VIX is up 5% in futures trading tonight, and so you know, it's going to be all about breaking those key resistance levels. If you look here at the VIX 15-minute chart, you could see here what was caught our attention today was when it got back above this middle Bollinger Band. It had broken above that dotted purple line here at 11:15, so when it was heating up, and then it got back above, you know, at 12:30, and then it really started pushing, and then it got above the 50 simple moving average, and that was when it's like, okay, yeah, this is really looking like you know, the market, you know, something's up, something's going on here, and you know, people started locking in gains, and you know, taking some action, because this was a signal that something wasn't right with the market. Well, they ended up fading VIX into the close, so it was a head fake. But this action right here was obviously people that, you know, maybe they knew that this tariff was coming, and so they you know, were getting prepared for the bad news that was coming, and then they head faked people with that pullback into the close to suck people in before they dropped the market. You know, so that to me, that this pullback at the end was the big head fake. The real move was this beginning move where people were getting prepared for that move that happened after hours tonight. And so let's look at VXX. Okay, so this closed down to 2% today. So it's been in this big pullback. It came down here and it hit this 32 support zone. Yeah, basically, I guess if you go all the way down here to 31, you know, it's hitting, I mean, this is the bottom of the chart for this stock. It's basically all about getting above EMA4 at 33.40. If it trades above that level tomorrow, that's when it could get cooked into the upside. You could see over here when it got back above the pink line, that was when it made that bullish move back up to $40. And so as long as the EMA4 at 33.40 is resistance, that signals more downside risk. You can see over here how the candles just keep riding that level lower, you know, keep riding it lower, you know, when it's bearish. And that's the pattern right now. You know, you'll know if it's heating up, it gets above 33.40. You know, if you're playing this for the bounce and it runs up to that level, it's always the sell zone if resistance fails to break. If you look at VXX on the 15-minute chart, you're going to know whether or not it's bullish or not by whether or not it's above this line, the green line. That's the 50 simple moving average at 32.37. If it stays above that level tomorrow, then it's going to be in play. Okay, if it drops back below, then that'll be the signal that it's not ready to go. The big key level to break after the 50 simple moving average will be the bottom of the gap, which is here at 33.40, and then you have the 100 simple moving average at 33.89, and then you have the top of the gap up here around 34.20. Those are the three big levels to break above. If you see it trading above 32.37 tomorrow, it's only going to be in play if it's above that green line, according to our strategy. Okay, so yeah, so keep it. We're going to keep an eye on VIX tomorrow and see if it can, you know, how this is going to play out. Let's look at UVXY here. Okay, so this is another, you know, this trades options, has the same setup. It comes all the way down here, and it's hitting that key support zone down near 950, and it's going to be all about getting above EMA4 at 1057. Once it gets above 1057, that's going to be a signal, okay, yeah, this is really in play. It's heading higher. You know, it has a gap on the chart. The gap here could possibly fill between high of day on the 9th and low of day on the 6th. And so what you'd be looking for if there was a break above EMA4, notice how it's lined up with the bottom of the gap, it is a potential gap fill and a run up to that middle Bollinger Band. Let's look here at yeah, see, so it's the same thing. I should have mentioned this before for VIX, is you have the gap here, And so, you know, the bottom of the gap, once again, is lined up with the EMA4, and so that's going to be a tough level to break. If it gets above that bottom of the gap, it could run to 34 and have a gap fill. Okay, if you look at the 15-minute chart for UVXY, it's the same setup. The Bollinger Bands are tight down here. You know, they pulled it back into the close after getting above the middle Bollinger Band, and so it's going to be all about getting it back above the middle Bollinger Band, like it did here, you know, between 1 and 2 o'clock, and then which is currently at 993, and then getting it back above this 50 simple moving average at 1004. It's been days since it's been above that level. If it breaks above that level, then look for a run up to this, you know, like I said before, the bottom of the gap at 1050, and then you have the 100 simple moving average at 178, and then the top of the gap up here at 1090. Those are the 3 key resistance levels above. And so IWM, okay, Russell 2000, it was a red flag today. Okay, so it came down and had formed a red candle. Okay, after multiple white candles in a row and multiple gap ups in a row, it had formed bearish 3 gap ups reversal pattern. Okay, so and so that's a signal that the chart was getting really frothy, getting really overextended, and so today that pattern was confirmed. Okay, notice how it formed a double top here, or multiple top. It's a temporary top, however you want to call it, with the closing price here on the 20th of June. It hit that level. It's failed to break. It has to close above to head higher and turn it into support. It needs to be trading above 169.50. Now, right now, the big level to hold is 168. That is EMA4. If it were to drop below, then you could see a drop down here to test that middle Bollinger Band at 166.46. For all the small cap and penny stock traders, you know, they run much better when IWM is bullish and it's heading higher. And so if it's under pressure, you know, that makes it tough for penny stocks to maintain runs and or to even get runs going. So keep that in mind. If you look at the IWM 15-minute chart, you can see, you know, it had that pullback today. This was the big red flag when it got below the middle Bollinger Band at 11 o'clock, and then it got below the 50 simple moving average at 11:15. It did come down here and bounce off of the 100 simple moving average, and it got back above the middle Bollinger Band. But if it fails to get back above that 50 simple moving average and drops back below that 100 simple moving average, basically at 168, that's going to signal downside risk. Right now in futures trading, you know, the Russell 2000 is under pressure. Let's look here one more time. Yeah, it's under pressure less than the other indices, the indexes, because the Russell 2000 is supposed to be the safer play for the trade war fears. The trade war fears were supposedly coming off the table, and that was like one theory why the IWM wasn't doing as well as the large caps. There's been a lot of sector rotation, and so anytime we have this trade war fear kind of thing, it seems like the Russell 2000 gets hit, doesn't get hit as hard as the other indexes, so that's something to keep in mind. One way to play the pullback for IWM is ticker symbol TZA. This is the small cap bear 3 times, and you can see here it closed up today, 1.4%. There was this multiple day pullback, and today bullish engulfing reversal pattern formed, and so we'll be looking for bullish reversal confirmation. The big level to break here is EMA4 at 858. Okay, so it needs to close above that level and turn it into support to head higher. If it fails to break that level, that's going to signal that it's not ready to go. It has to get above 858 for it to be a good play, and then once it's back above the middle Bollinger Band at 883, you know, that would be a signal that it's trying to get a new uptrend going. That would signal more upside potential. You know, the thing is that it's been under big pressure, and it had a bounce back in June here and got above the middle Bollinger Band and pulled back below. You know, if it fails to get back above that level, you know, that's going to signal, you know, it's going to be bullish for the small caps, and it's going to signal they want to break out higher. If TZA starts getting a new uptrend going, that's going to be a red flag for all the small caps, obviously. Okay, let's look at QQQ. Okay, so the technology sector has been doing really good. It got back up to the recent highs, and then today it stalled out. Okay, so they're calling this a doji here. It's close enough to a doji, and so it's a bearish doji star reversal pattern formed today for QQQ, and so that's a signal the chart's getting frothy. Anytime a doji or a hammer forms during an uptrend after a gap up open, it's a signal that the chart could take a breather. Now that it's a very good uptrend here, and it did close right above resistance. The June high close here, just above 177, is the big level to stay above. If it were to drop back below, what you're looking for is EMA4 at 175.92. You want to see that level hold. As long as it's holding, the chart is still super strong. The big thing now is just to be trading above this previous resistance level. If it pulls back below, it could signal a temporary top. In order for technology to break out higher, it has to make these new high closes. And so right now it's struggling with that, and with the bearish reversal pattern that formed, and technology being under, the NASDAQ being under pressure tonight, it could come down there and test that EMA4 level. Okay, so we'll keep an eye on that, and then one way to play QQQ if it's pulling back is SQQQ, and this is short the technology sector, short the QQQ, and so right now it had a pullback and it formed a doji after a gap down open, and that actually formed a bullish doji star reversal pattern, and so it's forming a doji during a pullback, and that signals a bounce. A doji during an uptrend signals a potential top, a temporary top, and a doji formed during a pullback signals a potential bounce. And so right now this is set up for a possible bounce, and then it looks like it's going to bounce with the futures trading, and EMA4 here at 1332 is going to be the big level to break. If it works back to that level and gets back above the middle Bollinger Band at 1372 is the key level to turn into support. If it could turn that back into support, then it could get moving higher. They're talking about, JP Morgan put out a thing saying that sell the technology sector. And so we'll see if people really start actually selling the technology sector by whether or not SQQQ here gets above that middle Bollinger Band and gets a new uptrend going. Okay, take a look here at SQQQ on the 15-minute chart, and what you want to see is a break above this 50 simple moving average. If it gets above 1308, that should be the big signal that it wants to break out higher. And then look for a possible run up here to 1344. That would be the next big level to break. Okay, so above 1308 is bullish, and then 1344 would be the next target. Okay, take a look at SPX here. Okay, this is the S&P 500. This is getting frothy. Okay, so it's formed multiple gap up opens in a row. It did close today above high close horizontal resistance, the closing price here on the 12th of June. That is the key level to stay above. If it pulls back below, it could come down here and fill the gap. There's a gap between high of day on this candle and low of day on this candle, so a drop down to the top of that candle would fill the gap, and there's also a gap down here between high of day on this candle and low of day on this candle. So there's two unfilled gaps on the chart, and today bearish 3 gap ups reversal pattern did form, so that is a very bearish pattern. That does signal a downside risk. It signals that the chart's just getting ahead of itself. Okay, it's just, it's been on a really nice run. It's pushing higher, and it's just getting a little bit ahead of itself. It might take a breather. That's all it's saying. It's not saying that a new downtrend is necessarily going to begin. It just signals that it could take a pause. What you want to see is this EMA4 at 2771 hold. If it drops below the high close level on the 12th, it would be most bullish if it stayed above that level. What we were really looking for is for the share price to stay above this level, turn into support, and break out to the next level. If it drops back below, then it could consolidate. This could become a temporary top zone, and then you could get some consolidation, some sideways action, maybe even a pullback. Okay, so let's look now at SPY. So really nice run for the for the spider here. It closed above high close horizontal resistance yesterday, and then today it followed through with another white candle. One thing I'm noticing on these charts is the upper Bollinger Bands off the chart on these indexes, and so that is signaling more upside potential. It's breaking out here, but it's taking a pause tonight, and so it might pull back. What you really want to see it stay above is this high close here, above this 277.50 zone. If it were to drop below, you have EMA4 at 276.67. The risk is if it drops below EMA4, it fills the gap down here. A drop down here below 276, the top of this candle on the 6th of July, would fill the gap. Okay, let's look at SPXS here. This is the S&P 500 bear 3 times, and so you know, if you think the S&P 500 is going to drop, then the SPXS goes up. You know, that's one way to play, you know, to play the downside without having to short a stock. You know, you can go long an inverse ETF, and that's the way you can get some upside potential when the stock market is heading lower. And so basically, you've got multiple red candles in a row, and so what we're looking for again is this EMA4 at 24.99. If it's trading above 25, that's going to be bullish. There are a couple of unfilled gaps on the chart. So you have the unfilled gap right here. It's a very small gap. And it looks like there's going to be a gap up open tomorrow. And you know, these 3 times ETFs, you know, the gaps are not always going to fill like a normal stock. Okay, so just keep that in mind. But there is also another gap right here. And so basically it's all about 25. If SPXS is trading above 25, that should signal that it wants to push higher. And then you have this 25.59 level. You have the EMA's 8 and 13, or 8 and 13 in the middle Bollinger Band all lined up in the same zone. And so if it can close back above that level, that's when it can get moving again. That's what happened right here on this candle. It closed above the dotted purple line, above the EMA's 4, 8, and 13, and that's when it made the nice run all the way up to here. And so that's what you're looking for here, a bounce and then a break back above this level, and that's when it could get a run going again. Okay, look at the SPXS 15-minute chart. Look how tight the Bollinger Bands are. The upper Bollinger Band's this purple line, the lower Bollinger Band's this purple line. When they get really tight like this, I like to use the example, it's like a champagne bottle, and the bottle is all shook up, but with the cork on, and it's getting ready to explode. And when the cork comes off, it's either going to pop to the upside or it's going to pop to the downside. The tight Bollinger Band signals that a move is imminent. It's setting up that this consolidation pattern is going to end soon and a new pattern is going to begin. And it looks like this is going to be breaking above that green line, which is the 50 simple moving average at 24.59. If it can get above that level and turn it into support, look for a possible run up here to 25.15. You know, you have the gap here. You know, those are going to be the levels. It's always the bottom of the gap's always a tough level to break. So 25, and then you can see the top of the gap is lined up with that 100 simple moving average. So keep an eye on SPXS tomorrow. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. As you can see now, the Dow Jones Industrial Average is down 200 points. You know, and you got VIX now up 6.5%. We were talking about all this in real time in the chat today, and so you know, people were warned, you know, and alerts were put out, and so yeah, if you want to be a part of that and learn about you know, and learn in real time, please come check out the chat. All right, I'll post the link below the video. Thank you.